In today's interest rate markets, let's take a look at the 10-year note futures as they're realizing some strength here today. We're seeing some buying pressure throughout the session. Now, initially, we did see them lower, and we did have the 10-year yield pushing up to 170 basis points. But then as the markets rallied throughout the session, particularly the middle of the curve, where we did see further initial strength, I should say, in the 5s, 7s, and 10s, a little bit more so than the back end of the curve today. And with that, we're seeing the 10-year note futures at 132.02 currently, retaking the 132 handle and pushing up towards the top end of the range in the last couple of weeks. And when you look at, I think one of the major factors today why we're seeing this renewed strength and yields coming under some pressure, CPI data. And interestingly enough, it actually came out a little bit ahead of expectations, but those expectations were set a few weeks ago. And really, when we did get the PPI data late last week, that reset, I think, the expectations for the CPI data. It just wasn't conveyed in the initial numbers. And so that PPI data came in much stronger than anticipated. The CPI data basically came in just a tick higher than what was anticipated. And after the reaction, we really did see, again, some renewed strength in the Treasury markets and pushing the yields down to 162 basis points currently on the 10-year. So a little bit of a reversal here after those data points came out this morning, particularly the CPI number. And looking at the trends in place, or the yields, I should say, we're looking at, as I mentioned, 162 basis points on the 10-year. Now, if it was to break below 161 basis points, that would be a new 3-week low for the yields on the 10-year. So we're hovering just off of the upper bound in the 10-year note futures and the lower bound when you look at the yields for the 10-year. And I also want to point out, as I mentioned earlier, when you look at the price movement today, we're seeing the 5s, the 7s, and the 10-year Treasury markets, futures markets, all higher on the session, and therefore we're seeing those yields pushing back down. And each of those yields are down about 5 basis points across the 5s, the 7s, and the 10s. Now you look at the 30s, are down about 4 basis points. So it is interesting as we do see the reaction to the CPI data that the middle of the curve is really where you're seeing more pronounced strength than at the back end of the curve in today's price action.